Hello and welcome to another edition of Current Market Insights. I'm your host, Ciaran O'Brien, and with me is Mr. Peter O'Malley. Peter.
Ciaran, great to see you.
Great to see you, buddy. I want to chat this week somewhat briefly about the property market, unsurprisingly. As we record this, we are moving very, very close to spring in 2026. Now, we always talk in property about spring being a big flurry, it's a new birth for the animal kingdom, but it's also a new birth for the property market. Given that we've come through one of the weirder first periods in the property timeline, I guess, in the first half of this year, I know myself and our listeners would really, really love to think or hear what you have to think about the property market this year and where you think it's likely to head as we move into spring in 2026.
Thanks, Ciaran. Look, we're recording this before the RBA meet to announce their August rate decision.
Yep.
And that's probably, that'll be on Tuesday, August 11, and this will be released on Thursday, August 13, but we're recording before then. So I think the first and foremost is that any increase in interest rates, not that I'm suggesting or predicting they would increase interest rates on Tuesday, August 11, but if they have, they have. But I think they'll be on hold at that meeting. That's my prediction.
Yep.
But if interest rates were to go up at any stage between here and Christmas, that will be pretty devastating.
Yeah.
So I don't want to get caught making forecasts about what will happen in the spring property market because I'm not sure that's helpful in helping people understand what's happening along the way. I think a good view that people should take going into any market conditions that are unknown is identify what they call signals and signposts that you should be watching. Market indicators that you should be looking for to help you understand what any given market is going to do. So when it comes to the property market, any upward movement or heavy jawboning from the RBA about interest rates potentially going up will be received very, very badly.
Yeah.
Households cannot in a lot of instances would not be able to handle another rate hike or two. To be devastating.
Yeah.
And I see one pundit who's aligned with the Labor Party, every time people are critical in open forums about the government's policy, he's coming in and saying, yeah, but look at the share market. Look at the share market. It's hitting record highs. And maybe for a certain segment of the market, the share market gains help support them against their day-to-day rising costs of living. But the reality is most households don't live day-to-day following what the share market's doing. Okay, they're invested through their super fund, but that's not helping them pay the car loan, the mortgage, and the school fees at the moment. So I find that really condescending commentary from that particular person, who I admire, generally speaking, in the view that they take of things, but saying to a household that's struggling to make their day-to-day, situation work, but look at the share market is ridiculous.
Well, the average Australian, no offence, but the average Australian household does not have enough capital invested in the share market to either realise a dividend that will make a difference or be able to access those funds to clear up a problem if they needed to. So, it's such an ignorant comment.
Oh, completely. And this is a high-profile journalist, I can tell you.
Yeah.
So just moving along, coming out of COVID, we were told that Australians had record savings, yeah? So that's why we were somewhat insulated, and the 2022 increase in interest rates took so long to grip because Aussies were sitting on so much cash to burn. That's far from the situation at the moment. So that's the first signal signpost that people should be watching over spring is what happens with interest rates. The next one, straight after interest rates, that I'm going to say in terms of importance that people should be watching is the unemployment rate.
Yeah.
I hope unemployment stays low. I support the government of the day in keeping everyone gainfully employed. If there is any significant jump in unemployment, whilst that will take the pressure off the interest rate setting of the day in some ways, that'll be devastating for anyone that's carrying debt and is in the unfortunate position of losing their job. And that's a very real possibility at the moment, as we know. Not only are households under pressure, but small businesses are under pressure. And one way, as we know with what we've done here at Harris Partners and all real estate agents have done, is look to become more efficient internally so that you have, lower staff essentially.
Yeah.
In terms of more so administration than frontline sales or property managers. But you can streamline a lot of your internal operations with AI, and I've got no doubt that, other industries and other businesses are looking to do that as well. So any jump in unemployment will be devastating. Some market-related indicators that people should be following this spring is days on market. How long is it taking for vendors and buyers to come together? You should be following the auction clearance rate, but you should be following SQM Research's auction clearance rate on a Tuesday, which captures all auctions, not the Saturday night number from the main media websites that is really just telling you what properties results agents want you to know about.
Yeah.
So that's getting to the bottom of it. Stock levels are going to be interesting, Ciaran. If I can say the thing I don't like leading into the forthcoming spring market, through winter, as we know, the property market has fallen decisively in Sydney and now around the rest of the country, even some markets that were performing really strongly. But in Sydney, the property market has fallen decisively on really low stock levels.
Yeah.
So that tells you if stock levels double and triple, as they tend to do from the middle of winter to the middle of spring, they'll at least double, if not triple. It's hard to imagine the market can absorb that sort of deluge of stock.
It's also not unrealistic to expect. If I think back to our conversations around spring last year, when we were really focused between August and the end of the year on the declining auction clearance rate, we were talking about on volumes in the 13 to 1,500 auctions mark. And our auction numbers we talked about in last week's episode were 540. Yeah. So it's not unrealistic to expect a threefold increase, particularly after such a miserable start to this year. We may even see a little bit more where there is, as you mentioned, there is more listing volume than in the last 15 years through your agency, and you are not going to be alone. So we may actually see potentially a 3 to 4-fold increase in properties on the market, which realistically is going to have a massive impact on that clearance rate and, sales closures across the board, days on market, etc.
Yeah. And, you go back to the line, the only thing we have to fear is fear itself. The reason you've got to be in tune with the true auction clearance rate is that is what most people in the marketplace gauge their view of market strength on.
Yeah.
Now, I'm forever in conversations telling people to take a broader look than last weekend's auction clearance rate, but I equally accept, wrongly or rightly, that that's what the consumer locks onto.
Yeah.
And that's probably why agents are so determined to sort of outperform that number and fudge that number by, reporting their sales but holding back their failed auctions, because they know that's the number the consumer is quickly looking for each week to fully understand what is happening. So if that number gets perennially weak, i.e. it drops below the 30-40% band that it's been hovering in for the last 4 months and falls into the 20s, if not the teens, and I've seen markets where it's fallen into the teens, meaning less than 1 in 5 people are securing a sale on the day, that will become, massive news. It doesn't take News Limited much at the moment to, make the downturn in the property market front page news, because they are weaponising the downturn in the property market against Labor, as we know. That'll just feed into further negative sentiment in the marketplace. So auction clearance rates are one to watch, that's for sure.
Do you think that if the clearance rate were to get into the teens, which is just, I know you've seen it before, but it's just unfathomable for me, do you think that we would ever be likely to see a shift in the way agencies do business? You are someone who often talks about the merit of a good private treaty sale. Do you think that more agents would adopt a more direct sales approach as opposed to
I think the smart agents have already done so.
Yeah.
I think the agents, I'll go as far as to say the agents that care about their clients and are realistic about the chances of success have already done so.
Yeah. And they're getting sales.
The bulldog agents that say, let's just go to auction, they let the owner live in a fanciful reality through the auction campaign, and then hit them with the reality on the day and go, that's the market for your property, take it or leave it. they're going to find this market in some ways really, really challenging because the negative reviews and feedback that will come out of that is that you just fed us to the wolves.
Yeah.
Will go around their local community. So as I said, I think the agents that care about their clients, care about their own professional reputation and are realistic about the environment there are already doing that, Ciaran.
Yeah. As we move towards the end of the episode today then, Peter, have you got any advice, given that we may be in a bit of an unprecedented time in terms of coming out of such a terrible market, going into what could be a very high volume listing cycle? Do you have any advice for buyers and or sellers as we move towards spring in 2026 in terms of just maximising their opportunities at the moment?
Well, I think the number one advice that I have for vendors is do not purchase before selling if the property you're purchasing is funded by the property you're selling.
Yeah, that's good advice in general.
It's good advice in general, but I had a client today that was going to, go out and buy at auction, and he was unsure as to whether to take the very decent offer that I had on his property. And I basically just had to serve it up both barrels to him about the risk he was running, buying before selling, and what if these buyers change their mind? What if they walk from the table? He must secure the sale, even if it means missing this property, and he will find something else in the heat of spring as stock levels skyrocket.
Yeah.
And I was really strong as I get with any client. Ultimately, the man's a mature age man that can make his own decisions, but he just wasn't thinking.
Yeah. Emotion took over.
That's correct, yeah. And we've discussed the risks of buying before selling in this market before, so we don't need to go over it again. In terms of also key indicators, and one that vendors should keep an eye on is the rental market. And the reason I say that vendors should keep an eye on the rental market is that in 2022, as we just discussed, Australians were sitting on record savings.
Yeah.
And if they couldn't get a price for their property that they were happy with, they were parking it on the rental market. And you were in sales with us at that time. You remember the amount of listings after having a 90% clearance rate the year before in 2021. Suddenly 30% of the listings that we're getting were being pushed off to the rental market.
Yeah.
Because it was rising rapidly. And it's like, if I can't get the sale price I want, but I can get that much rent, that works for me. So the rental market was a soft landing for a lot of vendors during that downturn in 2022. The rental market was soft this winter, as it is every winter. But as we get closer to Christmas each year in a strong rental market, the rents, the tenants come out to play and rents are pretty high. So I'll be keeping an eye on the rental market because that's a safety valve for a lot of vendors to pull that ripcord if they're not happy with the sale price. So we're selling a property for a landlord at the moment. He has an offer on the property. It's not quite where he wants it, but he's really happy with the rent.
Yeah.
If rents were to fall, that would put additional pressure on the property market, but I don't think it would happen. In terms of buyers, you should still focus on buying good real estate, not trying to take advantage or find someone that's in distress.
Yeah.
So if you buy good real estate, and you shouldn't get caught up on finding a bargain. Sometimes if you can buy good real estate in a downturn, that good real estate will bounce higher in price when the next cycle upward swing comes through. We don't know when that's going to be. But people that go out and buy an ugly property in a downturn because it's a bargain find when the upswing comes through, the property they purchased, the bargain property they just purchased, doesn't bounce as well as the rest of the market because it's compromised in some way.
Yeah, and as you always say, there's no such thing as a true bargain in Sydney real estate, right? Like that market has sailed long ago, probably in our grandparents' time, realistically. As we wrap up then, I just want to quickly get your thoughts. I'm not sure if you saw this, but there was it's been going across media channels and social media the last few days. An owner in the inner west on waterfront apartment listing has listed his property for sale at a significantly reduced price. And he has said, we're selling it for X amount of dollars. We paid 4 times more than that, but we are willing to lose 75% of this just to get out of this strata nightmare. And it just made me think of that because, as you say, there is no, and we've said before, there's no such thing as a bargain. If you're getting a bargain property, then there's very possibly an absolutely chaotic strata attached to it. Or if you're getting, something, there's always a trade-off in Sydney property, right? It is never as simple as being so lucky to just nab the right one at the right time.
Yeah, look, we're selling a property very close to that, and the owner sent that to me last night. I don't think his neighbours are particularly happy with what he's doing there.
I'm sure they're not.
I understand he's got his grievance with the building community and the strata there, and he's almost trying to shame someone into action. Is my take from the outside. So. Completely unhelpful to all concerned, but I don't know the specifics of what's driven him to do that, whether he's just after attention, an attention seeker.
It's clever marketing in one way.
Or whether he can't get the answers and the response out of strata that he wants. But at the end of the day, buyers should focus on buying the best property they can for the budget the budget and the affordability that they have. Moving that fellow's situation aside, what I resist and sidestep as a real estate agent is someone that preys on the vendor's motivation. Have they bought elsewhere? Are they in trouble? Distressed to sale? I want a bargain. I'm just after, in this market, a fair-minded buyer who thinks this is a good time to buy because of the overall market conditions, and they're willing to pay full and fair market price for the best property their money can buy in this market.
Yeah.
And if you do that, I promise you'll do better than someone that goes out and tries to take advantage of someone, or someone who's trying to just buy a cheap property for the sake that it's cheap.
Yeah. Yeah, it's amazing how just a little bit of honest and open communication can alter the whole dynamic, as opposed to one party trying to get an advantage over the other. Makes the whole thing more hostile.
Look, I'm a big believer in karma. Even in a booming market, Ciaran, when you talk about the Macquarie banker type mindset that is here to game the market and get top dollar for their property, because they don't understand the emotions that are involved in residential real estate, they usually blow themselves up.
Yeah.
And the person that gets the top price in a top marketplace is the couple that are going into a nursing home and say, we only paid $300,000 for this. How could it be worth $3 million? That sounds like too much money for these young ones. And it's like, well, that's what your house is worth. So you put it on the market for $3 million, but because it's priced correctly, they attract 5 people who want to buy it, and they end up getting 3.3, and they can't believe that they've copped a $3 million tax-free windfall.
Yeah.
And that's the karma of, they're not out trying to beat the market up. They're just happy to accept market price, but by being that, they attract the right buyers. And that's in reverse. What happens in a downturn is a fair-minded buyer will end up with a better piece of real estate long-term than a bargain hunter will.
Yeah, it's true. As always, really great discussion, Peter, and good advice for our listeners. I thank you for coming in and talking with us.
Thanks, Ciaran.
And thanks to everyone for listening to Current Market Insights. We look forward to speaking with you next time.
Thanks for joining us on the Current Market Insights podcast, brought to you by Harris Partners Real Estate, the podcast providing real estate insights you won't find anywhere else.